Hi traders, in this video we're going to be covering one of the most important trading topics, and that is price action. If you don't understand price action and you don't use price action in your trading, you are missing out on amazing opportunities and, more importantly, being ahead of the general market consensus. It's very important to be first in rather than last in. So let's get started right after this intro. Okay, well, this video is going to be part one of a 5-part series where we cover the most important topics when it comes to being a successful trader. So make sure you like, comment down below if you have any questions, and of course, subscribe and hit the bell if you want to see more of this content in the future. So firstly, we need to think of price action as the blueprint in the market. It's kind of like the structure of the market. And once price action has formed, we can start to learn from the previous price action what could potentially happen in the future. It's that ability to recognize the past and potentially spot something before it happens in the future. So another reason why price action is so important is it's locked in time, and each bar or candle represents really a war between the buyers and the sellers, or the bulls and the bears. And when it closes, that close shows who has won the battle during that period of time. This could be a weekly chart, it could be a monthly chart, it could be a 1-minute chart. It doesn't matter, and that's very important. If you're a scalper, a day trader, or a swing trader, or even a heavy investor, it doesn't matter what you're looking at or what time frame you're looking at, the same concepts apply. Okay, well, let's start by talking about the 4 stages of market, or as many people do call it, the Dow theory. And this theory is basically made up of 4 different stages, and each one of them will signal different phases of what a trader will want to do with their price action. So the first one is accumulation. Now, accumulation will generally occur once a trend finishes and a new trend possibly begins. So here at the top, we've got a sell-off that's happened on this particular currency pair, and the sell-off's been very aggressive, and then the market has hit a level of support, or a level where buyers and institutions and other people believe there is value in this particular pair at this time. So they start to buy and accumulate their positions. This is often called where the smart money is in the market. So this is the smart money concept. So if we label this, let's consider this smart money. Then the next phase we have is the public participation. So at a certain level, accumulation will break. That is the nature of a market. Price action dictates that eventually a range will break. So the accumulation in this case, in a bullish scenario, breaks to the upside. And we can see that happening with these price action candles. Now, important to note here, if you're ever looking at these kind of price action candles and you see bullish hammers like this one here, or you see long wicks coming off, that means the market's really tested that area, and you shouldn't be scared by that. You should be encouraged by the idea that there is a lot of participation to the bullish side happening around the right area or the right zone. So the next phase, the public participation phase, is what I like to call kind of the easy money, or the general area where the market will go to the next level of support or resistance in price action trading. So public participation is effectively where everyone starts to get involved, and this is where you may want to be. Obviously, you'd rather be in the accumulation, but public participation, there's nothing wrong with getting involved at this stage. This is also generally the largest of the market moves. So in the 4 moves, the public participation will be the largest move in terms of distance in the currency pair, stock, commodity, whatever you are trading. Then what happens is the excess phase. So the excess phase generally happens when the market hits a level that it should probably stop at, and then the market overshoots and effectively creates an excess. And this is what we call really the trap phase. This is the phase where the market will overshoot. It is a big trap for many traders because people think, oh, I shouldn't have taken profit here. I should have left my profit on. And this is the phase that you must be very, very careful about. Generally, when articles are written in newspapers or online, or when everyone's talking about a certain thing, that euphoric kind of atmosphere is the excess phase. So it's the one that you want to be the most careful with in terms of market theory or price action. So the next phase is the distribution phase. So pretty much what happens here is this is where people are taking profit. Big market investors are getting out. It could be a sign that it's gone too far in excess and that there is a reversal or a correction on the way. Here we see the break of the distribution phase, and this could signal a sell-off in terms of bearish sentiment coming into the market, and then the beginning of a different trend. So the 4 stages, again, accumulation, public participation, excess, and distribution are key pillars to you understanding price action. So let's now talk about price action when it comes to the market. So here we have the New Zealand US dollar daily chart, though it wouldn't matter if it was a 5-minute, 1-minute, weekly, monthly, or whatever particular currency pair or instrument. The same concepts will apply. So let's draw up a little bit about the accumulation phases and the different phases of the market. So the first one is the accumulation phase, and we can see that happens up here. And this is where the market becomes range bound after a nice bullish move, and then it becomes range bound, and then of course we see that sell off. So that sell off, and this is where the public participation enters. Now it's very easy to see that public participation would make sense to go to our first support zone, and then it continues to do this and eventually hits what we would call the distribution phase. And if we bring this chart over, which we'll do now, you can see the uptrend begins to come back in. So we've got to ask ourselves as price action based traders, when we understand the idea of the accumulation, the participation, the excess, and the distribution, what do we not want to be doing as a price action based trader? The simple answer is you do not want to go against the trend. As a price action based trader, you want to follow the trend. So let's draw up some support resistance lines and just show how easy this particular currency pair would have been to get into at certain points. We can't be a predictor of everything that's going to happen as a price action based trader, but what we can do is we can predict certain points. So this is a theory of when the support is broken, then we move down to the next area. That's that first participation area. And then that becomes the support. It breaks. Again, what a perfect sell-off zone. Very, very nice to sell here. Happens again. The support becomes resistance. And this is an idea of role reversal. And it's very key to your price action based trading. So the New Zealand US dollar shows us follow the trend when we're seeing these phases of the market. It's incredibly important to do so. So let's bring up a couple of other examples. Here we've got the pound US dollar 1 hour. And again, as I said, doesn't matter which particular time frame we're on. So we've got a very key level of support over here where resistance became support and the bulls lost control of the market right here. And basically the market broke through, came up, did the role reversal, and then sold off aggressively. The key here is what we call the 1, 2, 3 concept, or something I've covered on this channel before. And that is that if you see key levels of price action, support or resistance, in this case, the 1, the 2, and the 3, then we can potentially use those to say, okay, a lot of people are respecting this level. If this level breaks, that means the accumulation is done and the public participation point is in. And that's where all of the orders start coming into the market. That's where the big guys start placing further orders. So think of them as scaling in and then they scale out of a position. So the 1, 2, 3, it breaks through, it comes back and does the role reversal test, and then it continues on. Very, very important. So let's now bring together some of the price action concepts that we've learned, and we'll actually talk about what we call the top-down approach. Very important, often underestimated by many traders, especially beginner traders. The idea of a top-down approach with price action is that you want to understand the key levels in the market, even on the monthly timeframes. And we want to know this because this improves our ability to see where participation is in terms of the larger traders, the medium traders, and the smaller traders on the different timeframes. So here I've just drawn 2 key concepts in terms of support resistance. I'll draw the third one here, and then we go down to the weekly and we start to just confirm our support resistances. Because we're in a point of incredibly high volatility right now with this outbreak that's happening, massive overshoots in the excess phases to each side. And we can expect that due to the volatility index, etc., being so high. So here we're down to the weekly. Now let's jump down to the daily And we start to see a bit of a pattern happening here in terms of something that's happening on the pound US dollar. So we're on the daily. We can clearly see there was support down here. There was some form of accumulation. It went out, market participation's happening. And then at this stage, we've got that excess, because at this point, we would usually expect the market to stop and find some form of resistance, which it did not at this point. Let's jump down to a 4-hour now and just have a look whether that accumulation phase was clearly pronounced. And it certainly was. If we draw a quick highlight on this zone, we can see that accumulation phase followed by the breakout. Again, note the hammer candle, just like in that previous example, coming off the accumulation phase. It shows strong participation of the buyers. Very important in price action based trading. This is where we'd expect the market to go. And then of course it has overshot into that excess. And at this stage, we're in the excess distribution point of the pound US dollar. So let's go back over to that daily, because there was something I actually spotted on this chart for us to have a look at. Okay, so we're on the daily now. And in terms of what we're seeing here, we could even be seeing a potential pattern lining up in terms of a head and shoulders, with the left shoulder, the head, and the right shoulder forming here. And this is often a type of pattern that you will see with price action based trading coming into the distribution phase. So if this happened, it would go the distance of the head to the shoulder, and then that distance would pretty much push the market back under here, and that would go back into what was previous resistance, which would become support. So you can start to see it's about bringing so many things together, and that's why we're doing a 5-part series to bring these concepts together for you to trade with, because so important to use more than one reason to be in a trade. Price action might be the lead and might be the best, but it's important to use a whole bunch of different reasons as confirmation before entering a trade. Another one, just quickly, I'd always have a 20 moving average, exponential moving average on all of your charts. It will help you as a trader, and it can act as dynamic support or resistance to help you in trends. So usually also what you're going to see as a price action based trader is that when these types of events occur, you're going to see basically a high followed by a low, followed by a lower high, followed by a lower low, followed by a lower high, followed by a lower low. And this is generally what will happen, and most swing trade price action traders will trade this way. This is the general concept of a trend, though again, I'd like to use a live or example right now in the markets to show everybody that the aggression has been very, very serious because of the high volatility. And while this is what you're going to see 99% of the time, during points when the VIX is above 20, you can expect shallower pullbacks and further selling once you're in the participation phase. So very important to note there. So when we're talking about really long-term trading and we want to basically prove a concept, have a look here at when we're in effectively the accumulation phase for a very long time on the Australian dollar. So here is a massive accumulation phase that happened for a very, very long time, often known as a channel to pattern traders. And when it did break out, look at the aggressive market participation. So this is when we've got that participation coming through, followed by the distribution phase down here, followed by, of course, the change of trend on this time frame. This is a weekly, so incredible participation, well overshoots where we would expect the market to go, which would be this previous support. The excess comes through, and then of course the distribution followed by a return back to where we would expect the market to go, which allows us as technical price action based traders to potentially get back in. I always remember this because George Soros was actually trading right here. So if we actually highlight where George Soros was trading this particular currency pair, he was trading it out of the accumulation, and then he was taking profit in this area here. And then of course it went a little bit further, as it often does in the excess phase, comes back, retests the level, and then who knows, he may have been back in it. But the point is that he was here in this area, and I think a very smart way of looking at price action is to be in this kind of area here, the confirmation area where the accumulation ends and the market participation begins. And only through following price action can you get really good at this. So what I'd like everybody to do is, if you enjoyed this video, make sure you check out our free technical analysis pattern cheat sheet. price action and technical analysis patterns go hand in hand. So it's very important to understand these concepts, and this is completely free. There's no obligation or anything like that. It's just there to help you as traders get a further understanding of how to take advantage of price action based trading, and more importantly also pattern based trading. So jump over there. I'll put the link down below. Hopefully everyone enjoyed this video. Make sure you check out some of our other videos. I'll pop them above, and we'll see you tomorrow.